Hey, what's good everyone, and welcome back. I'm gonna do kind of a different video today where I actually get to, show my face and discuss a stock that's been in the news a lot lately. So honestly, let me know if you guys like this video and, this kind of style. It's gonna be a little more free form. So I want to talk about a stock called NAKD, ticker symbol NAKD, that's been, one of these meme stocks alongside BlackBerry, GameStop, Nokia, AMC. And before I talk about this, I just want to preface that I don't have a degree in finances. At the end of the day, these are just my thoughts and opinions about the company. So take everything I say with a grain of salt and don't listen to me. So I want to go into the fundamentals of NAKD, and I want to discuss who they are and what they're doing as a company. So even though there has been a lot of momentum lately, like around all these meme stocks, we saw a huge sell-off. GameStop fell 30% and fell another 16% in after hours. So honestly, right now the markets are just insanely volatile, and I don't know, crazy stuff's happening, man. But so on to NAKD. So check this out. On their website, they posted something on January 21st that reads, NAKD, or the company, a global leader in intimate apparel and swimwear, today announced that the company plans to undertake a transformative and restructuring in which it will shed its brick and mortar operations in order to focus exclusively on the planned rapid acceleration of its e-commerce business. NAKD will seek to leverage its brand, platform, and build out proprietary technology to meet the needs of consumers in today's digital world. Now that was a mouthful, but I think essentially you guys get the point. They're NAKD is a brick and mortar kind of store, right? They're a retail business, which, as I'm sure a lot of people right now know, is dying. In fact, after I did some research, I found out that I think they have about 300 different locations. They're based in New York and they're in 14 different countries. So they're kind of spread out all over the place. And in my opinion, I think what this signals is if they are moving towards, e-commerce and, websites, that sort of thing, I think we could see a potential in the future for them to basically liquidate and sell off a lot of their like properties and assets that they're already holding to raise capital for their e-commerce platform. Now, they haven't come out and said this specifically. This is just my speculation, but something to consider. I think it could be likely. So, quarterly, we can look at last year's quarter earnings. So, they're sitting on about 18 million in cash right now, because remember, these numbers are in thousands. And right now, their total debts are hovering around 91 million. So yeah, definitely not the most profitable company in the world. So since right now this company is technically a penny stock and it hasn't really turned a profit at all within the last few years, the sentiment around this company doesn't really look good. I can give them credit though for actually wanting to move towards more of a, digitalized system, which, we're going to be seeing more and more of in this world. If they can manage to pull that off, this company might have a shot at recovering. But even if they don't, I don't think that that's the reason why people are playing this stock. It's like, especially right now, people don't care about the fundamentals of a company. And you know what? I think that's fine. I think retail traders right now are definitely proving a point. That's for sure. A company doesn't necessarily need to be profitable to have value in it. But I think with a lot of these meme stocks, I mean, the name says it all. They're basically just memed into existence. Their value is. And I can see why this is attractive. It has a really low market cap, and there's been a lot of volume this past week. And another interesting point to bring up is short interest on a company, which was one of the reasons why we've seen GameStop push up so much. So if we look at a site called FinViz, we can actually see the short float or short interest in a company and the float. So float means there's about 41 million shares, right? Short float means about 75% of those shares are shorted. So if a company is hovering around 75%, that is an insane amount of shorts. And just to put that into perspective, GameStop had a 160%, which is honestly just unheard of. Looking at this, I want you guys to try and look at more sites if you are interested in this sort of thing, because one site isn't going to have all the answers. So if you look at shortsqueeze.com, we can see that for NAKD, the short percentage of float is around 32%. Okay, interesting. And then if we go to marketbeat.com, we can see that it's also hovering around 32%. So I think in this case, we could probably just take 2 out of 3. Never solely go with one site or think that they have all the answers. Now, another thing to note about this company too is, there's serious risk in this company. They don't have a very cohesive business model. It says in the past that they've, looked into ideas of selling tea, selling clothing, like dipping their toes into the cryptocurrency market. But, that was in the past. And lack of profitability. In fact, according to this, they've actually never turned a profit. So think about it like this. If this company runs out of money in the future, there is a potential that they could keep diluting share offerings, which would ultimately take away from the value of the share for existing shareholders. And the third reason, it's short for a reason. And, maybe you could make the same argument with GameStop, but I don't think GameStop deserved to be shorted into oblivion. But, a lot of companies and a lot of firms are short on these businesses that aren't profitable. And, it does make sense in a lot of ways, even though personally I would never short a stock. But, there are some serious concerns when it comes to NAKD and their profitability in the future. So I guess another question people might have is a short squeeze potential for NAKD? And with a short interest of around, 30% of the shares right now, there definitely could be. I don't think it's necessarily very likely, even though, 30% is a huge amount. Even 20% is considered a huge amount. So when you have something, with like a 30% short interest, that's, a short squeeze could definitely happen. That's for sure. And also, I guess wrapping it up, another thing I want you guys to keep in mind too is past performance is not necessarily indicative of future performance. So I know looking at this graph is a little scary, but, companies do have a way of turning things around, even though I don't think this company will ever be trading at around, like these insane price levels that it was back in 2013. But, hey, we could see a continued spike in price if this momentum keeps up. And honestly, with all these current market conditions and how crazy volatile everything is, I see this as a really high risk, high reward kind of play. This stock definitely has the potential to go way lower, and you could lose a lot of money. But it's at such a cheap value right now, and there's a lot of momentum behind it right now. Even though we did see a sell-off, that could always pick back up. It doesn't necessarily mean it has to though, right? Like we could continue to see another sell-off. So I think all in all, for the more riskier people out there, this might be a fun one to pick up if you want to put money into it, that you're basically not worried about losing. But yeah, guys, that's my brief summary on NAKD brand. All in all, yes, the potential for a short squeeze is there. It's a very risky play. And honestly, the fundamentals right now don't seem to really matter too much. So even though the company is losing money, I think you could still see a massive upside potential on a stock like this. So yeah, that's about it, guys. Be careful with your money, and thanks for watching.